All right, ladies and gentlemen, this is your watch list coming into September 19th, 2019, but today was historic and crazy in many ways. So why did the stock market go up today? I'm going to give a brief recap of what happened, what we saw with the Fed, the good parts, the bad parts, why it led to certain plays, why did some of our plays on Bank of America work, why did TLT not work, or what did it do? There's a lot of things out there, but I'm really excited. I've been saying this all day on stream. And shout out to Chad, man. Y'all killed it today on the live stream. I'm very proud watching my boy grow up, man. You guys are amazing. The maturity level, just don't get me started. Oh, man, I love these guys. But no, serious, salute to you guys. That was awesome. But I kept saying it today. Our work is cut out for us. So what we have leading in from today, how it leads into next week in the short-term response all the way to the midterm response, and that's even what Jerome Powell said to watch out for. So we're going to talk about the keys for today, the keys for tomorrow, what we play today, and then what stocks to look at tomorrow. I have a feeling tomorrow is going to be pretty active, and if not tomorrow, Friday, and then if not that, then the next day, and the next day, and the next day. But let's get into it. You guys know what you need to do. Drop your thumbs up on the video. We hit our like record on the stream. And speaking of stream, if you don't know, we are live Monday through Friday, 30 minutes before open. We will see you in the morning on this channel right here, so get ready. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. Let us know what you played today. We sourced some info yesterday. Again, the chat was just on fire today. Okay, stop getting me too hyped. Let's get into it. Right off the bat, the keys for today. Why did the market go up? Jerome Powell said he can consider more quantitative easing, and you could tell really when that happened. It was right around here when the markets took that as a positive. And again, if you didn't know, there was the report the Federal Reserve did decide to cut interest rates by a quarter point. The market went up and down literally every 2 or 3 minutes here. It was going up a point. Then it started to drop because there were some negative points, which I'm going to talk about. And then as the press conference came on 30 minutes later and Jerome Powell, he answered a ton of questions. We saw Trump actually tweet before the presser. And so again, he's even still on the table to see what happens, but that's the only thing we heard from him today. Markets went up after that, but it was the fact of talking about quantitative easing. And again, people are getting this attitude that the Federal Reserve, and this is a positive for the stock market and investors, that the Federal Reserve's willing to step in and, ease a little bit and make it easier for the markets to stay up. The negative, or I guess it's neutral, but mostly negative, there was 3 dissents, and that's AKA people who disagreed with the action taken, and that's people on the Federal Reserve Board. Despite them agreeing ultimately to cut the rates, 3 people dissented. 2 were in favor of no cut, saying that they didn't think the data was warranted to have no cut. And then 1 person, they dissented because they said, no, I want a bigger cut. So it was neutral, but mostly negative or hawkish, because it shows that everybody's not on the same page and that you have this potential for uncertainty with policy. But again, these last few Fed meetings and how Jerome, even though he's kind of been confusing, he's starting to kind of blend in with Yellen, where he's starting to actually give, he's giving the market exactly what it wants, and the market kind of realizes that. So these dissents weren't too bad. However, we have to see what happens today. Today was also a very low volume name, so how that plays out will be interesting. But the next thing that was also negative and hawkish was that the dot plot of the Fed members, so all the Fed members, they kind of give their estimate, and I usually don't pay too much attention to this, but I think it took a lot more weight here today because it was unanimously showing every single person agreed that nobody else is expecting further cuts for the rest of 2019, and that's negative or hawkish. However, if we look at the investing.com rates, I always say investing.com, but these are just the Fed futures rates. Market is pretty much 50-50, and so even though the Fed members are pretty much saying they don't expect cuts, the market is not fully convinced of that. But the good part of this, it's showing certainty, or at least some clarity where they're all agreeing on this, and this does create a different outcome or a different scenario than we've seen in the past. But essentially, with all this in context, this is why the banks went up. They could benefit from the lower rates, and then there's also the interest on excess reserve was lowered, as well as the repo rate, and Powell talked about that. I don't think it has. Again, he said we'll figure out what's going on with liquidity in 6 weeks, and I agree. I'm chalking it up to the tax payments. That's why they had to do it. But again, we will see. I think if it occurs once in offshoots with the repo rate and them losing control of those rates there, I think there's a logical reason before yelling, the market's going to crash on that. But if it does continue to occur, that's the clear sign of lack of liquidity. It's not just a one-off spurt. It's literally continuous. To give a better example of that, if you miss a credit card payment, you do not go into default instantly, and your credit card company does not try to secure your assets and send you into collection. It takes months after months after months before it gets to that point. But overall, the banks in general here can benefit from the lower rates. And if you saw, like we were talking about yesterday, we put it as the play of the day, the Bank of America. That was the play. It surprisingly did exactly what we wanted. Here's XLF. It's pretty much the same thing, but it did exactly where we wanted, where the SPY started to drop, and it did the little SPY move. But then when the SPY started to go down after that, it did its own thing, and it broke out and it led the way up. So if this continues, that is still going to be the play. And again, this play is going to it's a nice swing trade. And if it does keep going at this pace, we're going to be in for a nice little surprise. But overall, there's going to be lower rates. There's going to be more liquidity in the market for banks, more liquidity and capital in general. And the bonds and TLT didn't make the monster move simply because now the dot plot and then what people are expecting, it's still kind of uncertain. If we are expecting lower rates now, this did give a little bit more clarity. So TLT and people didn't rush to bonds as they normally would have, or as they did last time. Because even though they cut, you got certainty that this is starting to look like an actual mid-cycle adjustment, because nobody else on the Fed is expecting lower rates. So again, we'll see what happens with the market and if anything changes from there. But that's why the banks benefited, and that's pretty much what I mean by this, by saying bond rates are still low, but future expectations are being curved. So there's that. Hopefully that helps to give you guys some insight. If not, go watch the recap. It's on this channel of the stream. You can see what happened. It was a very, very fun day. Again, shout out everybody on there. But the keys for tomorrow, we got our work cut out for us, ladies and gentlemen. The market didn't respond too crazy, and it was kind of typical for a Fed meeting. This little pop, lock, and drop, and then irrationally rise up with this huge melt up, and you're like, well, oh my gosh, and near all-time highs. And it is starting to look like we will see upside up until there's more uncertainty, aka Trump derailing the trade deal. It's looking a lot like June, and this is what I was bringing up with the last meeting. And if we go back in June, this was the last time we had the Fed meeting. It was the 18th, 19th. The markets gapped up, and it was the same thing. We were high. We were at all-time highs. The market slipped and fell off huge. Trump walked it back, said, okay, we'll do a trade thing. China agreed to fix their currency. Things were good. Fed meeting. And the Fed meeting was, I guess it was somewhat more uncertain. It was the Fed meeting leading into this. There wasn't as much tension between Trump and Powell, but there was still some. Market went up, and it gapped up, and then it came back. So I think we might see something like this. But again, it all depends with how we are with the momentum and all those moves we saw last week. But that's what I'm starting to see here. So really, when we're making our plays now, watch even what we saw with how Bank of America and XLF played out. Watch for the laggers and leaders. So you could see XLF, you could see Johnson & Johnson. Some of these companies, and then you could even see Baidu. Some just even stayed there. Even if I pulled up FedEx or like Roku, some of the companies that had earnings, they did their own thing. You're going to see the companies that moved with the SPY almost on par. And then there's the companies that led and the companies that lagged and then really didn't even get affected by it at all. Watch out for those and pay attention, and watch the interplay between the banks, the bonds, and then the markets, but mainly the banks and the bonds, because now if we start to see this bank play develop, it will form what we saw with TLT. We just have to wait for the timing of it, because again, there was some good options. The options we bought yesterday actually went up, and they're still up 30%, but if there is some volatility, we're going to see, and there's 2 days left in this week, and so that's what I'm saying here. We're going to have some wiggle room for the plays for end of the week, but the bulk of the moves or even the reversal is going to happen next week, in my opinion. So again, and that means either we're going to reverse and it's going to look like June after running up here, or that's where everything will carry on. And again, as every single day that goes by, the key is what clarity do we get for October, and what clarity now do we have with the future path of this rates? Is it confirmed that the market agrees with the Fed, or is there going to start to be a divergence between that? And then is Trump going to mess it up? And again, pretty much unless acted upon by equal or opposite tweet. But those are your keys for today. And tomorrow, let's talk about the plays that we made today. So I made a few sets right off the morning. The first plays we made, I got 5 of these 32 calls, and they're pretty much the same price there on Bank of America. Then I got 5 of those at 15 cents. It was like $75. Then we got 5 of these at $12, which was another $60 on the put side. These ones got killed. And then I bought 5 TLTs after the event, the 151s for October. So I like the Bank of America's. Oh, and then I also bought, and these ones right here, these 31 calls that we bought from yesterday, those are actually the ones still up. These ones are at break even. And then I bought next week 31 calls at 13 cents, and I got like 5 of those as well too. So again, I'm going to start spacing them out between next week, October 18th, October 4th, October 11th, and October 18th. And then I like the November TLTs we got from Monday. Those are up 100%, but I like these TLTs on October, but I'm going tentative. And why I wanted to start throwing stuff out there now, so I got a hold of both TLT and Bank of America, because you could see when we overlay them, they pretty much at one point, they were both holding up while the market was literally in the gutters. But then eventually when the market broke out, TLT dropped off and XLF, finally did its thing. But in general, this is the part I really wanted to highlight for a lot of people, is what TLT's been doing. Despite the market, it closed up here just barely 0.1%. But when you see it, TLT's up almost 0.5%. So it's not as if TLT got crushed. You have to really realize this is still a monster move. The fact that TLT is still holding it. So bond rates are low, and this is kind of reflective of that 50-50 for the October expectation. So the bonds are still unsure. That's why I like the October 18th. Surprisingly, the weekly contracts or the next weeks on TLT, those are too expensive. The Novembers are still expensive. Here's your bellwether. They're actually the same price, but the spread as we bought them, the spread's a little higher. So if these come down, then we could get them. And even then, we bought those plays. They only dropped 2 or 3 cents, and I bought them at the top of TLT. So the volatility still holding it up, but the fact to get really closer to the money, you're gonna get more price opportunity in October 18th. If TLT really starts falling off, I'm gonna average down with the TLT 158s. And people were asking me, what is my plan to sell these? The Bank of America's, everything. My plan is hold these till I go up 100%. Once I go up 100%, I'm going to cut half of it so I could get my initial investment back, hold the rest of the contracts, and hold them up until expiration, usually, or the day before, unless they go parabolic 500, 1,000%, and then we'll cut profits all the way along the way up, or depending on if the climate changes. But, we'll cover those all live and make sure you're here, baby. But those are the plays we made today. And then another one, Roku, they dropped a lot. I sold a 128, 126 credit spread on the puts. Remember, we covered that one yesterday, so we got lucky, but they dropped on the news of Facebook's portal streaming service today. But I sold that for like $55. I think it went up to like $70, but I like it. I know a lot of people think it's really going to keep dropping here. This was a big move. It could have another 2-day effect, but I think they've already gotten killed. But we'll see. I mean, if it does fall below 118, this could be a massacre. So who knows? The options did go crazy today on the puts, so this could be a good frogger if the downside does continue. But I'm going to let it play out tomorrow and push it to the wall and wait for Friday if I do want to either hedge the position I made or see if we could get downside. But watch them. Watch FedEx as well too. I want to see how they play out. They had a nice continuation move and kind of bounced up. I think these are going to be in play tomorrow, and if not tomorrow, for Friday. But what we could set up even for next week, I like the call side. So I was thinking of selling a credit spread on the puts here too. Not really finding the odds. I'm really looking at calls. For calls with a little bit of time are doing the best, but you have to wait to make sure you could get this cuckening after the earnings out of it. Otherwise, you could buy too early. But I like them, and again, I like what they represent even here with the market. Next, in that same token, is McDonald's, and I wanted to buy these at the bounce for next week. I passed them up. They went up like 200-300%. But watch where they're at. This 210 level's crazy again, and if you see McDonald's run up, this is going to be kind of watching that laggers and leaders here and see what goes up if the market does move up tomorrow and reacts to everything here, because McDonald's has that momentum value stock aspect to it. So keep your eye out for that. Then watch Apple and Boeing. These are the next ones I want to be watching, because you could see they moved with the market, but they moved with the market on crack. Apple closed up almost a full percentage point, and so did Boeing. And this is usually what happens when the market starts to melt up during this. You may not see all the big companies move up, or you might not see every company move up, but what you will see is some of these bigger, heavier weighted names. These could really start to drive the market up as people just crowd into them. So Apple and Boeing are two of those trades. I really like Boeing. If the market is really, really positive here, it's going to start breaking out of this range. You could kind of see it. It's very rare that we see it hit one of these levels and then start to gain upward momentum. It's very rare we've ever seen that. And again, last Fed meeting was the last time you saw it, but after that it got cucked. So if it keeps coming up here and breaks, that'll be good. And if it starts to make a trend like this, oh man, just look out. That could be good on the upside again. So watch those. Those are gonna be the main ones. The next one, I really like this, just how it responded. All day it was up. Even after the Fed meeting, you could see it barely reacted. Johnson & Johnson, this is a good one. The thing I don't like about it is that it's kind of been pinned here on the daily, but if it does start to reverse, that could be good. If it does start to show strength and it's showing that people are just piling in and rotating into this, I'm going to go with them, and I think they're going to be a lower volatility, cheaper play that could just, this one will go up right under people's noses. Next is Walmart, and I like them on the downside. If they do go up, you could see how fast they went up, and it seems like I'm looking at a lot of calls here, but again, I still have some December put spreads and stuff like that we're still holding, even October's, but the key is I'm going to try to hedge through all of these companies that I'm looking for calls, play those on the calls if and only if we get a real big move on the market. but then use the downside pressure or try to play the downside through the stuff like bonds and banks and all that. But watch Walmart. This one I'm really going to like because they announced a $40 billion buyback. That's why they closed up 2%. Watch Microsoft actually tomorrow morning. I think this could be good even when you pull this up on the daily now. They've been cucking in this whole range, but if they break out to the top, that could be good. Actually, someone remind me about those in the morning. And then Intel, we brought this up a few times. It closed down alongside NVIDIA and some of the other chip makers, which has me a little curious. But overall, I still like them. And then Amazon. I wanted this one. I had that credit spread that we got yesterday. I was going to get another one here at the bottom. Even the same time I was going to get McDonald's. I hesitated on them, and that's what sucks in this marketplace. You're going to start seeing some big moves, and you're like, oh, should I get this call? Should I get that? You got to pick and choose and then understand where your exposure is. So that's where I'm trying to say. I'm trying to get exposure to some of these bigger names and then some of the lower volatility names where the option prices will be cheaper. So watch those, and even then, and speaking of option prices cheaper, I guess it's to the contrary, Baidu. Watch them because the options we have that we bought at the beginning of the week, those are still the same price. Baidu is still kind of looking like it's getting pinned down here. I think it'll take one more set of bad news, but watch the Asian stocks. I don't know what they're going to do after this, so we'll see that. I like Starbucks as well now, too, on a whole different end of the spectrum, but you could see kind of doing the same thing as Baidu, where they're doing their own move, but not making any big move and not really going up too much. Then Netflix, this got me curious. They dropped 2.5%. Again, Roku dropped. It was off the news of the Facebook stuff. I don't know if it would really directly affect Netflix, but Netflix has kind of been in a rut here, and if it does start to break and go into the downside while everything else starts ripping, again, pretty much if you start to see a bounce and you see some real weakness out of Netflix, this could be a good short there too. Then Booking, they were weird today. They were going up. They were up $20-$30, and then they dropped $20-$30. So even then, they still closed down a whole percent after this. Watch them in relation to the currencies and how that gets played out. But if there is any big volatile moves, I'm going to aim for Booking in some of those credit spreads. And then Beyond, I was trying to sell a put spread on it, but they had news today that finally dropped it. And this is going to get interesting. And if you want to play this, I encourage you to always just get with Beyond. Easy to spot the moves. And if it does start to move, it's really going to move. But just don't kill yourself with time. Whatever you think you want, just add an extra week to it. But the news came out that Tim Hortons pulled all the Beyond Meat products from there. They're starting to. And the market took that negatively, but then Goldman Sachs followed it up and said the headline's worse than what it actually is. And I kind of agree because I think it just makes sense that, some companies do that. They'll take a new product, they'll give it a trial run, and then they'll see how it is, and that's that. But I think just with all the press and hyper focus on Beyond, that was the reaction. But then at the same time, the stock did go up a lot on that news. But that is your watch list, ladies and gentlemen. Let me know what you're watching. Let me know how you did today. And guess what? Whether you made money, you lost money, it doesn't matter. You lost something. So stay hydrated, stay healthy, get that watch list, drop that thumbs up on the video, be ready to go, and I'll see you in the morning. Let's go!